Okay, so let's talk about my next move. Now, the market is getting hotter, it's getting frothier. A lot of people are getting a little bit antsy, and I'm making a move doubling down on Tesla, which will make me millions of dollars a lot sooner than people think. Now, allow me to explain what I mean. And I'm going to use a little bit of an analogy here, so forgive me for that little story I'm about to put you through. Now, I've not been dating for many, many years. I've been married since 2010, but even though the dating world has changed dramatically since I used to date, the core principles didn't change. Tinder didn't change the fact that all dudes, they look for the same thing, which is a woman that is, stunning and smart and independent and all that stuff, but also a woman that's not fully aware that she's a 10. You know what I mean? Like a woman who's a 10, but she thinks she's an 8, right? That's the perfect combo. Ideally, that's the perfect date, right? That rarely happens. That fantasy almost never happens because, people are aware of themselves. They're self-aware. And, if a woman is a high quality woman that looks good and she's very smart and accomplished, usually she's going to have the right attitude to come along with that. And that's fine. I have no issues with that. Now, in the world of investing, the same thing happens. It's very, very hard to find a stock that is also over absolutely every metric perfect, but is undervalued because, when a stock is doing great on the fundamental level, on the business level, it's an open information, everybody's seeing it. So everybody knows that that's a great stock and everybody piles in and, flood the DMs, so to speak, of that stock and push it upwards. And that's also fine. That's how, perfect market works. Information gaps are closed almost instantaneously. So when I see a stock that has fundamentals going one way up and price going one way down, and I see this weird movement, the pincer movement, where the price keeps dropping, but the quality of the company keeps rising, I'm saying to myself, oh my God, this is my 10 that thinks it's a 7. I have to get in on this. I have to double down on this stock. Now, the reason I've used this analogy is to show you that Tesla, even though it's been beaten down like crazy over the past, 3 months, it's down 35%. Since the peak of 2021, late 2021, it's down 60%. It's been beaten down. It's been absolutely hated on. Every single analyst told you it's dead money. You have to drop it. It's not going anywhere. EV demand is going nowhere. FSD is useless. And you're seeing other car makers struggle to put out profitable EV segments. We've seen that happen. We've seen what just happened with Fisker. Many, many failures. And it's just too expensive for analysts all of a sudden that told you just a couple of years ago that it's perfectly priced. Now, obviously, some of it has to do with Elon, rubbing certain people the wrong way. And I get that. I have no issues with that. But at the end of the day, whatever you think about Elon, whatever you think about Tesla, right now, factually speaking, Tesla is at peak negative sentiment. That's a factual statement. Tesla has not been hated on more than it is right now by the investing community, by analysts, by mainstream media. It is literally considered to be dead money, right? Now, it had a little bit of a good day yesterday, but the sentiment is still quite negative. Now, I'm looking at this and I'm saying, well, guys, hold up a second. This is a stock that for the past 2.5 years lost 60% of its value. So the stock is garbage, right? Stock is garbage. But the company, on the other hand, for the past 2.5 years, let's look what the company done for the past three years, right? So I'm getting excited. So the words kind of get mangled up, and that's okay. Now, for the past 3 years, revenue is up 200%. For the past 3 years, net income is up 1,600%. Cash and short-term investments is up 400%. Assets up 300%. And liabilities are up 80%. So let me get this straight. For those 3 years that net income went 1,600% up, revenues up 200%, cash up 400%, assets up 300%. For those 3 years where the company absolutely killed it, at the same time, the stock has been discounted by 60%. So are you telling me I can buy this beautiful car, which used to sell for $100,000 for $40,000 right now? Is that what you're saying? It's the same car, right? No, it's not the same car. This car is actually better. This is a way better model with more power, with more features. It's all, decked out, etc., etc. It's actually a better car. So wait, you're telling me this is a way better car than the one you were selling for 100 and now it's selling for 40? I'll take it. Now, by the way, if you just want to look at the past year for Tesla, because that's also a valid argument, maybe Tesla had a horrible year. Well, that's also not really the case. For the past year, revenues are up 20%. Net income is up 20%. Cash and short-term investments are up 100%. Assets are up 30%. Liabilities are up 18%. And it's trading 5.5 times sales. 5.5 times sales and 40 price to earnings. It's not trading at crazy levels. It's absolutely the cheapest we've seen it in a long, long time. Now, there's no doubt in my mind that the fundamentals of the company, the way they should be analyzed by any, long-term investor, which is the growth, the cash position, the profitability, the multiples, it's all getting better while the stock price is getting beaten down. I mean, the stock literally lost a third of its value in the past 3 months, right? But even if you go beyond this fundamental analysis and you kind of look at what they have in the pipeline and not getting excited about this, it's almost a Darwinian survival test. Look, as far as FSD, full self-driving goes, I don't know if any of you guys had experience with 12.3. I had a little experience with that, and it's absolutely mind-blowingly good. I mean, I've never seen anything like this. FSD is going to be full self-driving, autonomous driving, whatever you want to call it. Tesla has it. They're the only ones who are going to be able to figure it out. Whatever happens, whether it takes a year or 5 years or 10 years to go full autonomous, it's going to be Tesla who's going to get it done for the simple reason because they're the closest right now and they're running faster than everybody else. So what do I mean by that? Well, think about it like it's a race, right? Whoever gets there first. So Tesla is currently leading by vast amounts of gap, right? And they're running fastest, which means they're accumulating way more data at higher speed, and they have so much more cars that are adding every year, essentially widening the gap. And they have already the far superior than anything else, whatever kind of driver assist systems out there, and nothing comes close to FSD, definitely not 12.3. So that thing is not only going to become an industry standard, much like, back in the day, how Intel chips were basically driving every single computer out there. So FSD is going to drive every single software system of a vehicle in the next 15 years because it's going to be industry standard. Just like, power windows used to be not a thing and you used to do that thing with your hand. Remember that? And then all of a sudden it became a standard. Power windows, power steering wheeling, right? Steering wheeling. You know what I mean? Power steering wheel. That thing became a standard. Now every car has it. So FSD is going to be in every car and Tesla is going to drive it. Beyond the fact that it's going to generate nice profits for Tesla, its own vehicles. Not even to mention the fact that autonomous taxi networks, whenever they come, Tesla is going to be the one that's going to be first. And they have no competitors. I mean, there's no number two. And charging, they've already kind of become the standard, right? Everybody else basically gave up on building their own charging infrastructure. So they're actually an energy supplier. If you think about it, they have the biggest supercharger network in the world, and nobody's building new ones. So and they're expanding it. So they're becoming, if not already become, a monopoly in charging of electric vehicles. The energy business, which nobody kind of talks about anymore, grew 100% over the past year, from $3 to $6 billion. Megapacks are literally industry standard already, and they're still going to push out 2.5 million vehicles in 2024. And they just entered the pickup truck segment in the US, which is the best segment to be in. Not even to mention the fact that they literally are the first who started working on humanoid robotics, and they seem to be in the lead. I mean, if we're talking about humanoid robotics, you need to understand what kind of a size of market, of total addressable market we're talking about here. By 2030, according to all studies, there's going to be a shortage of 85 million workers. Things that people don't want to do, the smelly jobs, the low-paying jobs, the dangerous jobs, food, retail, security, bomb removal, you know what I mean. So all these jobs that are paying 50, 60K a year, which nobody wants to do, there's 85 million people missing that don't want to do these jobs, and that is going to be filled up by humanoid robotics. It's already a thing. It's kind of a known thing. So I'm not saying Tesla is going to grab 5% or 10% or 50% of that market. I don't know, but they're definitely going to grab some part of that market. And if you think about it, the employer cost of an employee, it's right for an employee that, earns, let's say $45,000, $50,000 a year. It's about $60,000, $65,000 a year as an employer cost. Now, that robot they're going to buy from Tesla, whomever, and I think a lot of Tesla robots will be sold, It's not going to get horny. It's not going to get tired. It's not going to skip work. It's going to do its job perfectly. It's not going to have breaks. It's going to be able to work 24/7. So how much would that robot be worth for a company? So let's say half of what it costs to run an employee. So let's say 30K, even though I think they actually should be paying more. But let's say 30,000. So multiply 85 million employees missing by 2030. By 30,000, we're talking about a $2.5 trillion market. Now, I don't know how much of it Tesla is going to capture or not. I'm personally in the camp that they're going to capture quite a lot of it, but let's not get ahead of ourselves. I'm just saying, look, if you look at Tesla right now and you're saying, well, Tesla has been beaten down, sure. Tesla is a horrible stock, sure. But look, Tesla is also a great company. At $500 billion, it's not a cheap car company. I agree. If you're looking for a car company, if you think that Tesla is purely a car company at $500 billion, yeah, maybe not the best deal. But at $500 billion, energy, software, robotics, and vehicles, come on, it's a no-brainer. Now, if you want to learn more about Tesla, if you want to join our community, we have a dedicated Tesla room on our Discord, discord.gg/TomNash. It's free to join. Would love to have you join the Discord, hang out with us, talk to us. It's a community of like-minded people who like to talk about Tesla, Palantir, and other stocks. If you want to take the next step and kind of learn how to become a better investor by learning how to DCF, how to model, how to read financials, how to be patient, how to be smart, join the academy at patreon.com/TomNash. We would love to see you there. And if you just want to join the Patreon, it's $5 per month just to join the Patreon and hang out with us. And of course, if you made it all the way to this video, all the way to the end, I'm going to do something that I did yesterday. I'm going to give it again today. It's a long video, I know. So, last 50 on the screen right now. It's not going to be in the description, not going to be in the pinned comment. Last 50. You can get Stock MVP right now, stock-mvp.com for 50% off, and your price will never go up ever, ever, ever if you hit that code. I'll see you in the next one.